Hey everyone, Coach Investor back to another video for today. So let's talk about Tesla. We already know the earnings date. We got the production and delivery numbers. We've had some analysts change their estimates. We're gonna have a look at that. So Tesla this year, just like other growth companies out there, has been hit quite heavily. It's down close to 45% year to date. So that just goes to show you that, well, the market has been extremely, how can I put it? Not kind, let's say, to growth companies or just the overall market besides the energy and the oil companies, right? So we're gonna have a look at all of that in this video. But before, if you wanna support this channel, do check out the link down in the description below to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and do check out all the other links down in the pinned comment. So on Saturday, we got the vehicle production and deliveries for the second quarter. Now it was just a tiny miss. Deliveries came in at 254,695 and production came in at a bit higher, 258,580. So a little miss there. Yes, obviously much lower than a quarter before, but still a nice growth year over year. Now what's the most important point here is this right there. If you're a Tesla fan, you probably heard this before. June 2022 was the highest vehicle production month in Tesla's history, which probably means that Q3 will be extremely exciting. Unless obviously we have more shutdowns, but that's just out of our hands. But if June was the highest production month in history, probably means that Shanghai is at a record high, Fremont, record high, then Berlin and Texas, obviously since it's wrapping up, it's continuously going to be at record highs. So expect over 300,000 vehicles produced in Q3, maybe even a lot more. Now with all that said, you do have to take into consideration the higher costs of goods, the materials, etc. Since everything has been going up, it will probably affect Tesla as well, especially in Q2. Lower deliveries, lower productions, higher costs, so that will obviously affect them as well. We're going to have a look at the new estimates for earnings per share, etc. Everything is going to be here on actually Seeking Alpha. The link is also down in the description below to upgrade to professional, because you will not be able to see all of this if you go on the website right now. So do pay attention. Again, link down in the description and in the pinned comment to get a little discount. Now I am using this purely because, well, you have all the analyst ratings, valuations, etc. and it is very well up to date. Now, most of you will probably look at the F right here for valuation, not for something else. Behave, guys, behave. So valuation, it calculates the usual metrics. So a valuation will always be an F right now until the PE becomes smaller and smaller. Now for the rest, growth A, profitability A+, momentum B, even though if you look at the graph, well, it could be a bit better. And then EPS revisions, it's a B+. Now let's have a look at that one. So last quarter, they obviously beat earnings per share by 96 cents. And on the GAAP one by $1, revenue came in at $18.76 billion. Revenue surprise at $907 million. Now for the next quarter, which is going to be in around 2 weeks from now. So it might seem a bit early, but well, it's always, I believe, third Wednesday of the month. So EPS normalized estimate right now sits just below $2, $1.93. GAAP estimates $1.66, and then revenue lower than last quarter, $17.33 billion. And how many EPS revisions in the last 90 days? We have 6 upgrades and 7 down revisions, which you can see right here, and which is why it got a B+. So the annual earnings per share estimates for this year sits at just under $12. At the start of the year, we were all, well, expecting, I think, above 12, just below 13, around that number. Now with the quarter that we're having, obviously that will be below 12. Forward PE sits at 56.93. Then for next year, 2023, earnings per share of 15.75, and then a forward PE of 43.30. Now, as for the annual revenue estimates, this year expected to finish under $95 billion. Next year, that will be in the hundreds of billions of dollars, more specifically $114.14 billion. That's just an estimate. We can go higher, we can go lower, just depends on what happens on the macroeconomic environment. Now with the earnings per share estimates for this quarter, it sits at $1.93. As you can see, it's a huge difference from the up and coming quarters after that because of what happened during that quarter. But even though it's still 33.22% growth year over year, which is quite nice. And then it just goes back up 70%, 44%. Again, those are just estimates. Remains to be seen what actually happens. Now, if you want to see this in a more graph-like way, you can see clearly that, well, Q2 of this year has been an outlier on the weaker side, right? It has actually been trending down since, well, late March. And that's just normal because after that, well, Q2 started, the whole Ukraine-Russia thing, high inflation, etc. So that's normal, but all the rest are trending up quite nicely. So if you're thinking about this long term, well, maybe this is an opportunity for you to get more shares of Tesla, or just maybe open a new position if you're still looking for an EV play. And last thing here is obviously the history of the earnings per share estimates. Did they beat it? Did they not? So all the way back in June 2018, they beat it. The next quarter, they missed it, well, by a lot. They missed it again. Then 2 quarters in a row, they beat it by a lot. Missed again by a lot. Beat, well, you can see it by yourself, but it took all the way until Q1 2021, until this quarter that we had in March, to actually continuously beating and beating and beating. Now, let's see if we can continue that record, but don't be surprised if it misses. So there you have it. If you're asking me what I'm doing personally, Tesla is my largest position in my portfolio. Currently, I'm building up a cash position to deploy it during the earnings season. So right now, I'm just sitting on my hands, not doing anything, seeing how things play out during this current earnings season. Yes, you might have heard earnings compression. That might happen. That might also be just a short-term problem. If you're looking at the long term, take this moment, take this as an opportunity. That's just what I'm doing. Obviously, do share all your thoughts down in the comments below. Do you think Tesla will actually beat? Or do you think they'll miss? What's your game plan during the next earnings season? Leave it all down in the comments below. If you want to see more videos like this, do hit that thumbs up button, do hit that subscribe button if you have not. And again, do check out all the links down in the pinned comment because, well, some of them might save you money and most of them are extremely useful. So again, like and subscribe, and I'll see you all in the next video. Bye bye.